What a week just had. It's been a really busy week in sustainability. I am kind of flabbergasted about what I've read and what I've seen in the news. And so, what I'm planning on doing is doing a weekly roundup of what's been going on in the news that is focused on you, the person listening to this, because I'm anticipating that you're either a business leader or a sustainability expert that is wanting to reduce your organization's emissions or are interested in organizations reducing their emissions. It'll be interesting to see over the next 52 weeks what actually is going on in society and what is affecting business, and maybe we could start to see trends. But I would like to talk about climate tech trends and the funding that matters, because they shape the tools, partners, and risks your organization will face over the next few years. So let's start with climate tech, AI, and investment. I am using an aid memoir thing, which is why you'll see me kind of going on. It sometimes does stuff, but investors are now demanding climate impact and solid business cases. What does this mean for you? So for corporate buyers, this means favoring climate solutions with clear payback, and strong unit economics and measurable emission cuts. So you've got to be really definitive with what it is that you're doing and be able to produce a really good story. We've seen a lot of AI and data center growth, which is driving huge power demands. So organizations hosting or serving AI workloads will need really serious strategies for clean power procurement and be really efficient with the way that they run and be flexible to that demand because of that extra use in energy. We're going to see big grid constraints, and this is a big strategic risk for us in the business world. With almost $500 billion going into grids, we're going to expect more grid charges, connection delays, and regulation that affects your sites and PPAs. Green's finance is now mainstream and is really a part of the corporate finance world. Nearly $1 trillion of green bonds and loans last year signals that sustainability-linked lending terms will increasingly shape your cost of capital. Alternative proteins fall from favor is a cautionary tale. Hype without cost, performance and customer value resilience can unravel quickly. A reminder to stress test your own green bets. So we've seen a lot in the news about Trump and Venezuela, and what does that mean to us in business and how will it affect us? So this will be about oil, geopolitics, and the transition risk. So large-scale oil bets show the system is not transitioning evenly for businesses. This means planning for a messy, volatile transition where fossil prices, policy, and public opinion may swing sharply. Public money is still underwriting fossil expansion, And companies dependent on fossil supply chains face mounting reputational risk and future policy shock as subsidies are questioned, and they're being questioned on a regular basis. Methane from oil and gas is drawing intense scrutiny. Corporate buyers of gas or LNG should expect tougher methane standards, supply chain data demands, and potential cost impacts. Methane leakage and corporate responsibilities. The Venezuela scale leakage highlights the risk in your own value chain. If operations are clean, Scope 3 exposure to leaky producers can undermine net zero claims and investor trust. Methane's short-term potency makes it a priority target. For many portfolios, cutting methane in the supply chain can deliver faster climate impact than marginal CO2 reductions alone. So really look at your supply chains, look at what it is that you're doing, and do you have methane within it? Poor operational standards are a warning on supply diligence. Tightening your supplier codes, audits, contract clauses on flaring and venting will become a board level expectation. So disasters, resilience and adaptation. Billion-dollar climate disasters are now a business as usual backdrop. We've seen what is happening with climate and the hurricanes and the weather patterns that are changing. So business continuity planning must assume frequent disruption to logistics, data centers, offices, and critical suppliers. The cost and frequency of events are rising sharply. Insurers will reprise risk, pushing companies to invest in resilience, site selection, and asset hardening to keep cover affordable. Public data sets on climate risk are getting better and more granular. Sustainability teams should integrate these data sets into site strategy procurement and TCFD and ISSB style disclosures. And finally, I'm going to talk a bit about policy data and corporate transparency. So the moves to weaken climate data and monitoring increase uncertainty. The inconsistent official data means businesses will need their own robust measurement and verification to maintain credibility. So organizations like ours at 51 to Carbon Zero will be able to eliminate much more risk and allow you to plan for the future much more wisely. Corporate climate lobbying is under microscope. What does this mean for us? It means that investors and employees are increasingly asking whether political spending aligns with stated climate commitments. The narrative is shifting from green stories to power and accountability. Boards will be judged less on pledges and more on how capital allocation, tax strategies and advocacy align with net zero pathway. So media, culture and your narrative. Climate stories are being told through finance, tech and daily life. Business leaders like you who connect emission reductions to jobs, innovation and resilience will cut through noise much, much more effectively. Podcasts and newsletters are shaping how staff and stakeholders think about climate internal communications that reference these wider narratives that can help make your strategy feel current, credible, and engaging. Hopefully that's a useful summary of what's been going on in the news in the last week. We can see some real clear subject matters coming out of, even in the first week. We're looking at risk and supply chain as a really big thing to think about. So why don't you come and talk to us at 51 to Carbon Zero and talk to me about what it is that you can do and how we can help you become more sustainable. Or come and join our engagement platform and become an ambassador and a advocate of ours and earn a 10% commission on anything that you sell. As you know, I'm doing this because I firmly believe that this is the best thing to be doing. You can earn money off it. We can be making a better future for everyone, but also we can also eliminate that risk and help supply chains.